Good afternoon, MMTs and the MMTs worldwide. What we're going to talk about today is the S&P 500 again. What these trend lines represent is that was the last high before going into January 2015. We made that bottom and we rallied up slightly lower than what we started over there, and basically when we shorted the put options, we darn sure did. But if you go to the website on the S&P, you're going to comfortably know that you can go back here and you will get the indexes here on the S&P. It's all here. And go to the 113 S&P and review before I do the live, and Tesla Motors. A lot of stuff to cover. So basically, right now, the bull got back in on the short-term bottom on the daily chart. You've got what we call the reversal top. You've got the rally top. And this diagonal line means one thing. On that particular bar and that 100-day simple moving average, we ran straight up. The bulls came roaring back. And the last trading day, we hit 2065. Now, what we're going to show you here today is why we're buying the put options again. Now, the put options, when I said they were inflated, they made a big buy. But here, let's go back a little bit. You know, whoever is watching this video, you know you haven't seen a call chart. You know you haven't seen a put chart. But why do you all like to trade options? Why? You don't have the right tools. And you know it. Because I'm showing it. And it's up to you to take responsibility for your actions that you do. Now, on the put side, we're looking at buying the puts again within the overall ranges of the S&P. And down here, we can clearly see that the last open interest on this contract, they traded 534 on 122, and then on, and this is a daily chart, so the S&P puts are totally deflated at that strike price. Now we're going to take a look at the 2065, and the 2065 is January 15th. Now listen, these were up and out of the money, and check it out. They're not really, they started out deflated. You darn right it did. And I'll get my info tool to prove it. It likes to prove a lot of things, and it's going to prove this one right here. On this particular daily chart, the 2065 call right here on that high was $33. And it was. And 3 days lower, 3 days later, that low was $7.25. That was the first deflation in the 2065. We popped. We'll put a trend to there. We popped and we sold down again, and we consolidated that low at the very same time that consolidated that low. We were cashing out what I just showed you. I just showed it, and I'm going to show it again. So the thing about this, guys, is to know what you should be doing when it needs to be done. And the only way you're ever going to figure that out, you are going to have to do one thing. You have to go to the stock market funding site, and hey, it'll have it. Listen, the data is here. The data is here. Take advantage of the data. Look at what was doing. These are option trades for the most part. You want to learn how to trade options, we're the first ones to tell you. Here's the 2015 And back then we said that that's all your information right there, and where those lows were and whatnot. And it was time that we had to unwind the short side and go into the long side. And we did. We got the short to pay, and now we're getting paid big. So here's that 2065 call on the S&P, and we can clearly see that the calls got deflated. You know you're seeing a call chart for the very first time in your life, and I know it. And at $6.10 was worth buying, and the high the next day was $17. You want to learn how to trade index options, 2065 here, but going back on that opposite side, which is the call side, there it is. That's the value starting all the way back over here at $6.10. What a great move that was. There was a great move on the put side. Now there's a great move on the call side. That's the 265. Now let's go back through here on the S&P. Let's go to the opposite end of the S&P, what the put option looks like. There it is right here. That put option was, now let's tell you what it was. The high was $65. Yeah, we did trade it from down here. You damn right we did. It was $28.70. We went straight up. Look at it. When the market was selling up, we went straight up. So the put side is deflated. And the put side right now is $16.60 on the low. So definitely that's coming into play. We're going to go see what else we got for you. We're going to try to figure out if we got a ham sandwich or not. Now, we're going to take a look. The S&P 500 calls and puts. This is the put side that was in the money. So here's what happens to people. It happens to the biggest professional, all your little freak websites that are trying to tell you what it is. They don't have a system. They don't have anything. And go find out. Go find out. You know it and I know it. Here's the high, $60 on the put side. Called a 140 put in the money. At $60, they're getting down here. They're deflated. The low was $7.75 to buy the premium down below on that particular strike. Another thing I will show you is right here. It's right here. So let's see what the open interest is. It's all right here. All right. The 2040 put, which I'm at 943 contracts, but here's the deal. The call side of some of these is they've had great moves, and they have. And they took out, listen, here. There it is. 2040, 2040. I just want to make sure. Now, that side of the market's deflated. But let's go take a look at another strike price for where they made money off of the 20. Here's where they made their money. And here's where we made our money. And a lot of money was only 642 open interest. That right there go to show you either the public doesn't know how to trade them or they're scared to death. Yeah, you heard what I said. Scared to death. Trying to make money. They're scared. 46.80. The date, 1/8, mate. And we went from that 235 call where they'll never know when to come out. They're never going to know when to come out. Why? Because they're greedy. They're greedy. They don't have this chart to look at because they don't. The low here was, the bottom was, we started at 1550. That low right there was 1532. And that low right there was 1540. That's on the low. The highs were 1555, 2265, and guess what? The final movement came in here at 1460. They popped it what? They popped it to the high of 2230. This particular day was what? A $23 open. And guess what? They jacked it right here to $20. That high right here. They jacked that thing to $37 on the S&P 235 call. And then we've had this side of the market that can pay us. The other side is what we're going to be looking at on the open interest is going to be the following. And here's what we're going to do. We're going to look below the market right here, right now. And what we're going to do is look at this open interest. And obviously, the open interest right here is 10,000 volume on Friday. It never had no open interest. And this chart is going to show you very clearly that this particular put was out of the money. But look, now I just want to show you. Day volume, 12,000 puts. Puts over here, 2050, open interest. They bought them all at these ranges, 10,000 puts on last Friday. And from that time on, the only thing that we can see right now is the opposite side where they bought the 2050 call. Here it is again. They bought the 2060 call at 10,000. They bought 8,700 of those put calls. So the calls went from where? They went to a high, and the daily open interest is 87.31. On the 27 call, up and out of the money, you can see this big movement. That you can. Once again, my friends, we want to do a special segment on here, and we're doing it with the open interest now on the call side of 2075, 10,000 open interest of the 10,000 contracts there, and then they're even buying the 2105, 2100 contracts. But here's a real big one on the call side, 14,600, and I will put those in there so we can watch those. And that's the call side, 14,000 at the January 2100. Okay, so I have covered a lot of calls and various different trades. I want everyone to focus on the 2060 because this is the 2060. We're looking at January 15th, 2060 puts. They're deflated, my friends. Now, listen. Pigs get slaughtered and market makers take the money home. And they do it all the time. Here you are, right there. And these goddamn put options, the bears did not know when to get out on this particular contract. They did not. And they went to the woodshed. And the bottom line is right here for the put option. So that if you got in the put option right over here, it was 26.70. What a home run. That's better than Babe Ruth. They were up here at $76. That's the 2060 put. And the all-time low right now was $13.70 to get on the put side of a deflationary product called the S&P put chart. Now, when we go back to the daily at 2060 and I draw a trend line for us and where they're buying, now this is the S&P. So basically right at the top here is where we're going to be looking at on the S&P 500 as the major wall of resistances, and then of course 2080, and that these put options are extremely deflated. I want everyone to understand the 2055 is very deflated on the put side. But why is it that they're not getting a real big run here? And what that is about, they're stealing the premium. They're stealing the premium below the market that they bought, and they had a $19 high right here on the 2055 call. And that's the one that we got to stay focused on. The put side, 2055 put, we got to stay focused on. The index support and levels with our market maker system, we have to what? Monitor both the call and the put. And it's very, very nice that we do all of this before any market maker move that we have. And there's a lot of in the monies that I put here. I will throw in the 2070, which is out of the money, right in here on the 2070 put side. That's up and out of the money side. And that's what we're going to do with the S&P for all our S&P trainees. You will learn how to take both sides of the market. Oh yeah, you will. And then guess what? If you're taking this side of the market like we do, we're going to be happy to let you know one thing. We're going to be happy to let you know why that S&P will do what it's going to do. I'm going to convert it right now. I'm converting right now. ISRG had a big move. Priceline, Netflix. Here's the actual range of the S&P on the last trading day. It's right here, 2045. You had Google. You had all of these Amazons. They all got paid on the Friday expiration that just passed us by. Yes, they did. And in the S&P 500, we want to take a look here at what the individual stocks do to make either side, the call side or put side, is going to perform. And it's always the range today. Range today. That was a big, good range, and everybody was short covering. I mean, look, the whole thing was positive, and they were trying to buy the dip, sell the rip. And guess what? We have a clear view at every stock that is either going to sell off and take this down, or a combination of S&P 500 stocks that would rally us into the next resistance level, and the individual markets would show that who the players are. We are in earnings season. Yes, this is a special of the S&P call put side. And guess what? The resistance side on Friday that started to do what? Started to have its first reversal. Okay, it's earnings season, man. You got to know where these names are. So they had a rally one, they come back on a drawdown, and your bigger rally here was 1 day, 3 day, and guess what? 5 day. It goes 1, 3, and 5. So good luck to all you wonderful people out there that watch the S&P or the SPY. It really doesn't matter. We are telling you what to do and why we do what we do on the S&P 500.